we turn now to a different country altogether, Central and South America. And Fiona MacAulay is Chief of Echo Energy. I was talking to one or two people earlier who are definitely your shareholders, so they'll be very interested in hearing from somebody who has, I think, I dare say, 30 years of experience in the oil and gas industry. Certainly never a veteran, but certainly a legend. Over to you.
So Echo Energy was launched in the spring of last year, so a little over a year ago, almost 18 months now. And its mandate was to build and grow a business in Latin America, South and Central America. And the rationale for that was to really take advantage of a lot of the infrastructure that existed across that continent that is currently underutilised. It sits running at less than capacity, and actually in our business, one of the most costly parts of the business, as Andrew mentioned earlier, is it's no point producing oil and gas if you can't actually get it to market. So having the ability to utilise that infrastructure really brings down the costs for a company such as ourselves. We are the newest kid on the block of the three companies that are presenting here, and currently the smallest, but that we hope will not be the case in the next 3 years. So our asset base sits in Bolivia and in Argentina at the moment. We have a series of licenses down in the southern part of Argentina in the Austral Basin, which sits right down here on the southern tip of Argentina. That's actually the oldest hydrocarbon producing province in the country. And that is connected directly, just so that we're aware, up to Buenos Aires, and goes through a number of other conglomerates en route that take a lot of the gas that is produced from that basin. Just recently, and perhaps we can talk about macroeconomics in general in a moment, but just recently there has been the sanctioning of the ability to actually export gas from that Austral Basin over to Chile. So we now have another export route in addition to feeding into the domestic and industrial markets in Argentina. In terms of oil exports, we're exceedingly lucky because within our operating acreage, we do have access to a direct oil export terminal. So we're little more than 40 kilometres away from actually being able to take oil that we produce in the field area into the export market. So we are, as I say, listed on the AIM market. We are a full cycle exploration led, I would say gas focused, but we are increasingly increasing our oil production, E&P. Our production at the moment sits at around about 1,000 BOE a day. About a third of that sits in oil production, and that's something that we're building. And the other remaining 2/3 are in gas production, and that gas production is sold into a series of consumers across the country. We have no problems at all in selling all the gas that we produce, and we also have no problem at all in selling the oil. That's all sold in dollars. Not only dollar denominated, but actual dollars that come straight back into our accounts. I would like to just mention a little bit on the macro environment in Argentina. I mean, we've all seen the news over the last number of months. There is rampant inflation. We have seen a severe devaluation in the peso. When we entered into these assets, the exchange rate peso to dollar was about 18 or 19, and we're up above 40 at the moment. So are we worried about that? Inflation is never a great thing. We're worried about investor sentiment, but for us personally and in our asset base, actually, if anything, it's been a bit of a positive benefit to us. We maintain a strict treasury policy where, as I say, all of our cash is kept in dollars, we pay all of our bills in pesos, and we convert those dollars on the day. So in real terms, across our contracts, we've seen over the course of the last year, probably a sort of benefit of in excess of 25% in terms of our operating costs. Historical data indicates that actually inflation takes around about 3 years to catch up with the devaluation. So in a real sense, we are actually, sadly for Argentina, but happily for us, we're actually benefiting from that situation. In our interims, which were published to the end of June date, we had cash on hand of $34 million. And that leaves us as a pretty well capitalised company in this region. Just to focus back on what the last year has brought to us, we completed a transaction in Argentina to get into 3 main asset bases. They're not quite as well named as footballers in Egypt, and they're rather more boringly known as Fraction D, Fraction C, and a little bit more punchy Tapiaiki. So that deal completed in January. We're now in the middle of October. Since completing that transaction, we really hit the ground running. We are the technical operator on 2 of those block sets, Fraction D and Fraction C. And what does that mean? Well, that means that fundamentally we sit there as some of the brain power behind actually completing these operations. So our team, which we've been building significantly in the UK, is responsible for some of that brain power in determining where to drill the wells, what to do next. I'm delighted I've got Jeff Probert sitting here today, so perhaps afterwards if there's any other questions you can direct them at him too. But Jeff is our Chief Operating Officer, and he's been with us for about the last 6 months, and I think he's not quite sure where he's been for a lot of that time, but you know, it was great to have Jeff actually down in the field area during the last month during some of these operations. So when we put this package of assets together, and we really did put this package of assets together, we went in to see the company that we farmed into, and we kind of cherry-picked the bits that we wanted. We knew we wanted some high-impact exploration, and I'll come on to that in a moment. But we also wanted to get some existing production that we could build on, and some sort of lower scale exploration and appraisal activities that we could get our teeth into. You know, it's really important when you're building a business to actually get that operational credibility, and I think what we have done over the course of the last year is to really do what we said on the tin. We set out with a timeline that seemed pretty tough to achieve, but we've actually managed to do all of those pieces of activity that we set out to do. And in doing so, we have added to that existing asset value that sits in the ground. We started off the activities with a series of 3 workovers. Now, workovers can be a little bit boring, I think people might imagine, but actually in a very short period of time we actually added 30 BCF, or around about 30 BCF of gas resources in Fraction D, which we're putting together a development plan for at the moment, and that is a viable low-cost development plan that will be feeding straight into the infrastructure once we get that kicked off. We drilled a total of 4 exploration wells. Now, we need to put these into perspective too in terms of the cost of operating onshore, and in particular in this area. These are really, really quite low-cost operations. I think I calculated that we'd spent something like $1,000 a metre in total over our entire campaign. So there's an awful lot of metres drilled for quite a low cost. That's about 1/5 of the average cost of onshore drilling across the continent, and it's about 1/20th of offshore drilling. So you know, we've managed to get a good number of metres drilled over the course of this year. All 4 of those saw hydrocarbons. 2 of the wells, one of the wells was depleted in its hydrocarbons and is unlikely to be adding to any production, although my understanding is that we're monitoring that well, and actually it's still kind of producing a bit of gas into the wellbore, so that's a positive. One well is a gas well in the north of our fraction D. That again is being monitored, and we've now got a stimulation plan in progress for that. So we'll be heading back to that in the not too distant future. And of course, the well that encountered a significant column of what appears to be oil hydrocarbons is also awaiting stimulation. So these are in quite an unusual reservoir. They're not your traditional 30% sandstone reservoirs. They're in a very unusual volcanic rock, and what we do know is that the norm in this basin is actually to have to stimulate these wells. So we're very excited to be heading towards a stimulation program, as I say, towards the back end of this year. We've also just recently initiated a pilot project to increase production within what was a pretty much shut-in field area. The daily production from that field was probably in the order of less than 20 barrels a day. I'm being told maybe even less than 20 barrels. Now, for a very, very small cost, we've just completed a pilot project. We have recompleted 4 wells. We've added new pumps into the system. We're in the process of tying those, or have tied a couple of them in already, and the rest are just finishing their commissioning. And we're seeing, as we speak, some really significant results. Now, I have seen, and yes, we do read some of the bulletin boards, that you know, people are anticipating 500 to 600 barrels of oil per day out of these 4 combined. That isn't going to be the case, but we are going to see a significant contribution and increase to the production that we have. So I think we need to see all of these things in the context in which they're done. These things cost a couple of $100,000 net to Echo, but they can significantly, particularly at $80 a barrel, add to our revenues. There is no point in us updating you on exact production rates until they've all, what we like to call, oiled in. All of these things take a little bit of time to settle, to get the pumps commissioned properly, and so we will be updating the market on the results of those production figures. But even without those, we are on track to be delivering revenues of probably just in excess of 9.5 million net to us. And as I say, with the peso devaluation leading to those decreases in OPEX, we hope to see some nice results on that by the end of the year. But what about the transformational growth opportunities for Echo within these existing licenses? As I said, when we went into the licenses, we were very focused on some exploration upside. We focused in on a license that had been awarded to our partner just in 2017, last year. And this is a license that has been overlooked. There have been existing evidences of gas in the area from wells that have been drilled there previously, back in the 70s and early 80s, when really they were only looking for oil. We know that there's a well there that we think can produce at relatively high rates, or would have been able to if it hadn't blown out and anecdotally burnt for about 6 months. So, you know, for those areas in particular, the seismic data that we're about to commence shooting is going to be critical to ensure that we drill wells safely. We had a CPR, a Competent Persons Report, commissioned by Gaffney Klein at the time of the transaction, and that identified 41 leads and prospects. And of those, over 3 at least in the mid case had prospective resources of over a TCF. Let's just remind ourselves, what does 1 TCF of gas mean to Echo? Well, that should have a developed value to Echo, net to our 50% equity interest, of around about $500 million. So these are significant opportunities for us. We've got 3 independent play types on the block, plus a small oil play that sits out here to the east of the block. So 3 independent oil types, play types. That's important because if you should have failure in one, it doesn't necessarily transfer itself onto another. We're intending to drill a total of 4 exploration wells on those licenses over the course of the next 3 years. And importantly, we're heading towards the first of those wells being drilled in the second half of 2019. Before we drill that, we need to shoot seismic, and via a highly competitive bid process, we have just recently awarded a contract, and we are due to commence shooting that seismic in December. And when I say a highly competitive bid process, the savings that we made on that contract award were in the order of about $7 million. And that's $7 million of real cash, and that's real cash that can be put into that exploration campaign. So that was quite an achievement for us to complete. So seismic kicking off in December, 2 cubes. We anticipate that the entirety of that seismic acquisition will take around about 5 months. And clearly we'll be processing each cube individually, so we should be able to start really looking at honing down those locations by the middle of next year to get ourselves drill ready by the latter half of next year. So what can you expect? What's in the pipeline over the next few months? Well, we announced yesterday the Rio Salado signature. I'm just moving away from Argentina here, back to Bolivia. For those of you who know the Echo story, we have an agreement with Petroleum, who are one of the biggest operators in the area, over one of their exploration blocks, in which there's one of the largest undrilled structures. Around that sits a piece of open acreage that they took an exploration concession on last year with the government. We did a side deal with them. You're only allowed to keep these technical evaluation agreements for 1 year, and you agree a work plan associated with that. We completed the work programme for them on their behalf as part of that. We saw something that we liked at depth. But at the end of that time period, we were not ready to commit to a firm well on that acreage. And one of the reasons for that is that we have 2 wells drilling, one to the east of us, one to the west of us. These wells in general, as some of you will know, almost certainly have a first birthday. That means that they're quite expensive. And really the value in this acreage lies in, real value lies if one of these 2 wells that are drilled actually comes in and is a success. I don't think any of you would thank me for spending $70 or $80 million of your cash on going out there and drilling a well at this stage, but actually we have significant value if we see success in either of those 2 wells. And as part of our work programme this time, what we've managed to do is agree a work programme whereby for a very small amount we acquire some 2D data that goes across that block that was shot by one of the big multinationals just 2-3 years ago for quite a considerably excessive amount compared to what we're paying for it, and we get to incorporate that into our data. So exciting times there. We'll be announcing some of the results on the total oil that is being produced from those pilot pulling jobs over the course of the next couple of weeks. We just announced the EMS 101 pre-stimulation work, and clearly we'll be moving on to bring in the rigless mechanical stimulation units towards the back end of the year, and we'll be addressing both the EMS 101 and the Estancia La Magui 1004. We'll be kicking off the Tapiaiki seismic acquisition in December, and of course that leads through to the fast track processing and completion of the processing, and all of that is aiming towards these high impact drill locations, which should be drill ready by the second half of next year. Of course, if this pilot pulling project works out well, we'll be increasing that, and alongside this, of course, we'll be looking at the fraction D gas monetisation project. I think it would be fair of me to say that we are still in business build mode. We are in the right postcode here. We're determined that we're in the right postcode here. And not only have we added Jeff to the team this year, but we've also added Martin Hull, our new CFO, who has just joined us after 2 decades at Rothschild's. he's finally jumped ship and come to the other side. And he, of course, brings with him great capabilities in the M&A capacity and has increased our skill set in that area. He's been with us for a couple of months now, and it's really very, very nice to sort of have someone alongside who's able to help drive those parts of the business. So exciting times ahead, and you know, we look forward to delivering you a significant amount of news flow over the not too distant future. Thank you.
Okay, thank you very much. Pretty comprehensive summary there. Questions for Echo and Fiona? Yes, one over here.
Hello. Could you go back to the slide on Tapi Aki?
Yeah.
You can see you've got a gas pipeline running just to the north of it.
Correct.
Is there spare capacity in it?
Yes, absolutely there is spare capacity. You know, that is one of the joys of this project, is that not only have we got good access to the acreage and very good pricing when it comes to how much these wells are going to cost. These wells will be slightly more than the ones in fraction C and D, by the way, but we're still looking at less than $5 million net to Echo's share for any of the wells here. But yes, access to this pipeline, and by the way, this is the Argentinian border just here, and Chile's just across the just across the hills. Then yeah, we've got spare capacity actually in either direction, which is very cost beneficial to us as a company.
And your partner there, are they funded and willing to participate in the wells? They're happy, ready to go?
Absolutely. You know, CGC, our partner, produce about 30,000 BOE a day. So they are very well funded. They're part of a much larger conglomerate. They're the second largest conglomerate in Argentina. Their market cap is something like, well, just the airport side of the business is $1.5 billion listed on the New York Stock Exchange. I think in total the company is probably closer to $3 billion in terms of market capitalisation. So yeah, they are well funded, and yes, this is their key block.
So why do they partner with you?
Oh, now that's not a very fair question, is it? Why did they partner with us? Well, actually, do you know what? I don't think that many people had been out there banging their door that were international oil and gas companies. So a number of smaller service type companies had been talking to them, and in fact, while we were completing the transaction, you know, we were kind of beating off some local companies that had wanted to come in here. Funnily enough, as well, we were talking to another multinational company about something else, and they asked much the same question. They were quite surprised to see our name on the final farm out agreement, and you know, they were just rather surprised, but we formed a very good relationship both at the technical level and at the personal level with our co-venturers, and you know, maybe we just bring a different thought process to the table, but we have built a very good relationship with them, and we see the benefits of that.
One final question. Funding, you've got quite a lot of cash at the bank. Those wells are about 5 million each, you're saying. Are you fully funded for all of next year?
We are fully funded to go all the way through the seismic and to drill a well.
One well. Okay. All right. Thank you very much.
Any more questions? Fiona? I was just going to observe here that presumably in the sort of negotiations you've been talking about, having come from a background of very large companies is very helpful, isn't it? Because you have that experience even though you're not necessarily as large.
Well, that's correct. You know, I think at the end of the day, commercial negotiations are the same across the board. Both parties need to win. There is no point having a commercial negotiation where you've got to win.
I don't think Donald Trump would agree with you there.
He might not, but there again, one would hope that we have a better standing.
Absolutely. Sorry to have compared you with such a person. Any further questions for Fiona? Very polite and giving her some nice questions. Anyway, thank you very much indeed, Fiona, for being one of our companies this evening.